Let's come back to the Monetary Policy Committee of the Central Bank of Nigeria, which they delivered its final interest rate hike decision of 2022, raising policy rates 100 basis points to 16.5. That brought the full year total to 500 basis points, the highest in many years. Here is the Central Bank Governor, Godwin Emefiele, delivering the MPC decisions a short while ago.
Our outlook. The overall medium-term outlook for both the global and domestic economies remain clouded by uncertainties associated with the Russia-Ukraine war, lingering COVID-19 pandemic, and continued lockdown of major industrial cities in China. The persistent tightening of global financial conditions and slowing global trade are also significant pointers to a weakening global economy. On the domestic front, available data on key macroeconomic variables indicate continuing rebound in output growth for the rest of 2022, which may occur at a much slower pace than earlier anticipated in the light of the unfolding domestic and external shocks to the Nigerian economy. The domestic shocks originate from the persisting insecurity, inhibiting economic agents, rising cost of debt and debt servicing, deteriorating fiscal balances, increased spending as the 2023 general elections approach, and a continued uptrend in inflationary pressures. Accordingly, the Nigerian economy is forecast to grow in 2022 by 3.3% CBN estimate, 3.2% the IMF estimate, and 4.2% Federal Government of Nigeria estimate. The committee's consideration. At this meeting, the Monetary Policy Committee was concerned that the global inflationary pressures have continued to trend higher and financial markets were also facing challenges. It observed that this was indeed the trend in Nigeria, with inflation attaining 21.09% in October 2022. The committee, however, seized the opportunity to appraise the efficacy of its decisions at the last meetings and came up with the conclusion that the decisions were beginning to yield the desired results, given that the rate of increase in inflation was beginning to moderate in view of the month-on-month deceleration in prices presented by the NBS, Consumer Price Indices. Members noted that though the global economy was progressively weakening due to the various headwinds derailing the recovery, domestic output growth remained positive as a result of the continued support from fiscal and monetary policy. MPC therefore urged both authorities to continue to harmonize its various policies to achieve the desired objectives of stable price and steady growth. In reaching its decision of whether to loosen, hold, or tighten the stance of policy, committee felt that given that all the causative factors such as Russia-Ukraine war, supply chain disruptions, slowdown in China, and rising inflation in advanced economies and other headwinds were still dominant, a loosening option was not desirable at this meeting. The committee also felt that with the rising inflation, loosening the stance of policy would lead to a more aggressive rise in inflation and erode that gain already achieved through tightening. As regards whether to hold, MPC was of the view that a hold stands at a period close to December festive season and expected heavy spending during the 2023 general election at the time of high inflation would greatly jeopardize the gains of previous policy rate hikes and plunge the economy deeper into the inflation trap. MPC therefore decided to continue to tighten, but at a somewhat moderated rate, noting that tightening the stance of policy would narrow the negative real effective interest rate margin and thus improve market sentiment and further restore investors' confidence. MPC also felt that recent developments in terms of observed month-on-month deceleration in the rate of increase in inflation suggests that the previous tightening moves were yielding the expected outcome. He therefore felt that sustaining the tightening would further consolidate the decline in inflation, albeit more significantly. The decision. MPC noted that inflation has continued an uptrend, even though at a decelerating rate, despite its last 3 consecutive sizable policy rate hikes. The committee's choices were on whether to further hike rates or pause for the impact of the last 3 rate hikes to continue to feed through. At this meeting, therefore, the options considered were primarily to hold or further tighten the policy rate. The options to loosen was not considered, as this would gravely undermine the gains of the last 3 policy rate hikes. Committee thus voted by a unanimous vote to raise the NPR. 9 members voted to raise the NPR by 100 basis points, and 2 members voted to raise the NPR by 50 basis points. In summary, MPC voted to 1. Raise the NPR to 16.5%, 2. Retain the asymmetric corridor of plus 100 and minus 700 basis points around the NPR. 3. Retain the CRR at 32.5%, and 4. Retain the liquidity ratio at 30%.
Joining me now to discuss the full-year interest rate hike decisions and the future forward outlook is Tosin Osunkoya. He's a co-managing partner at Commercial Partners. It's great having you here. Tosin,
thank you.
It's good to have you here. Thank you for coming through. Give me your first word on the monetary policy overall decisions. What did you get from the central bank? What are the pieces you picked to put together?
I think I was a bit surprised that they would hike again. Because they've been,
that was not a hold.
Yeah, not a hold, because they've been very aggressive in the last 2 or 3 meetings. You would agree with me that they've done about 400 basis points up until this meeting.
Now
this meeting is 500. And not only that, they've also increased the cash reserve to 32.5. I thought that at this time they should see the impact of what they've done, the measures they've put in place. Yes, the inflation rate year on year had gone up to 21%, marginally above 21%. But you would see that on month-on-month basis, the food inflation and the core inflation are beginning to decelerate. That to me shows that, there's some sort of effects coming to play in what they've done.
But here we've got what the IMF says is going to be a likely food shortage next year on the back of these flooding across 25 states. Do you think the central bank has priced, the MPC won't price that in moving forward?
Yeah, they priced that in. Not only have they priced that in, they've also priced in the energy crisis, coming from the Russian, Ukraine war,
yes,
and also the supply shock that's been lingering for now.
And electoral spending?
Yeah. And
which hasn't really kicked in fully.
It hasn't kicked in. And if you listen to what he said, to what Mr. Governor said about the fact that we're moving into the festive season and also the election year, that they need to prepare for that. I mean, one could understand why they decided to increase it, but not to increase it by 150 basis point, but to increase it by 100 basis point. What that means is that going forward, they might begin to see some moderation in increase in interest rate.
You think central bank monetary policy is done with a triple-digit interest rate hike? Do you think it's not likely to continue next year?
I think it's likely to continue. We might see one or two more hikes into the first quarter next year.
But not the kind of steady hike that we saw since May this year, almost every meeting since May.
I think I would expect them at the next one, which is coming in January, to hold all these rates. And I will tell you why. It has a far-reaching implication, because if you look at it, and I'm sure that they must have considered that, or they need to stay at some point. If you look at the implication of this, particularly on the deficit for next year, because the budget deficit for next year, we're talking about 10 trillion. 10 trillion is a lot of money. One of the major concerns of this government is the debt service. You and I'm sure you've read this a number of times, that the debt service is the elephant in the room, right? And you cannot go into the international capital market to raise fund because capital right now is scarce and is expensive. So they are all now boxed and limited to raising capital to finance the budget deficit locally.
Is it likely that the MPC will raise rates until we have a new administration in June?
It's most likely. Like I said, they might raise it one more time.
Just one more time?
One more time before the next administration takes over.
Somewhat. What do you think that will be able to achieve? Put together, what's your thought on that?
I mean, right now, the CBN governor is excited that they're beginning to see some, reward from the deceleration month on month. And I would expect that with this recent hike, that would impact, or try to address inflation going forward. But for me, it's a lot more than that. The monetary policy or the central bank cannot be the only anchor in terms of addressing inflation. If you look at the contributors to inflation generally, you have the cost push and you have the demand pull. What central bank is looking at is the demand pull. The demand pull can only be addressed when you come into the market to increase interest rate, because what you're trying to do is to encourage investment and savings. But the cost push is immediate. You can imagine after today's announcement, what's going to happen tomorrow. Borrowers of funds are going to begin to suffer for it. And the depositors are going to begin to ask for more rates on their investment. That takes place immediately. And that's my major concern.
So that leaves the state of the economy.
Yeah, it does really. I mean, particularly now that everybody's crying hardship everywhere. I mean, businesses are actually suffering. You would agree with me. Not only locally, but globally. People are laying off because they cannot see they cannot see significant increase in terms of economic activities in their businesses. Now you are putting increase in interest rates because, for instance, let's take the manufacturing company, for instance. They are going to come to the market to raise finance for expansion and to run their businesses. If you want to come into the capital market right now to raise debt, you will be raising at a very high rate.
Yes, well, because even the government is doing a sukuk at 15.8.
Absolutely. So you can imagine the likes of a few good names that have come to the market before this announcement. They've gone ahead to raise for 5 years and for 10 years. They'll be excited that they're raising before this. But for those who are planning to raise next year, they have their job cut out for them because they're going to be raising at a very high rate.
Interesting. You were talking about the financial markets, what will happen tomorrow. Put together so far, I'm sure those of you in the markets are beginning to count your box of eggs so far this year. What does it look like?
Boason, it's been a very hard year, not only locally but globally. Asset prices are being repriced, or asset classes are being repriced globally, obviously because of the Fed increasing the interest rates or increasing their Fed rates consecutively. And it's not just Fed. BOE recently also increased their rates. So what has happened is it's been a bearish sentiment. And I think that's going to go into next year. So what has happened again is the bond market and the equities market have suffered a lot more from the equities market. Equities market locally, if you look at what has happened year to date, at Q1 this year, everybody was excited that the all-share index was at 16%.
Yeah. 18. We did 18.5.
Right now,
we're doing about 5%.
Now we've eroded practically everything. We're about 3% year to date. So if you have shares right now, you're clearly not happy that your shares are not doing well.
Unless you're going to hold on to it. But again, the real sector, do you think the real sector will be pricing in this full year rate of 500 basis points for the year? What do you think the impact will be moving into the new year for companies in industrial manufacturing who are looking at 500 basis points this year and they're taking all that on board and they're going to sit down having end of year board meetings and look into 2023?
I think a lot of them would obviously need to look at two major components on their books. One is the energy cost and the interest rate expense. So you're between the devil and the deep blue sea. So how are you going to manage that? I think it's important for them as they go into the new year that they begin to plan for another rate hike. Well, guess who is going to suffer the most for all of this? It's the end users.
The consumers.
The consumers. Because the consumers, if you dollarize the disposable income right now, you and I, assuming our salaries have not been, raised in the last, 8 months, and now you have inflation on your disposable income, if clearly you're not going to have a purchasing power at the end of this year or next year. So if you're talking about festive season, what would make people go out to spend money is when they have a disposable income to spend. But if the disposable income has been completely, tightened because of, pressure coming from inflation,
yes,
then you don't have any money to spend.
So if that goes, take me to the local credit market and exchange rate. Do you think the Naira would take a bit of a beating on the back of this latest 100 basis hike?
Yeah, I think so. I think that right now we're beginning to see some stability in the FX market. I think that the role of the speculators are being, addressed or tamed a bit. The speculators again, and this could be a good omen for, for central bank to increase rates, okay? Because the speculators are looking for the best use of their capital. So if the capital is not moving to investments or savings, they will go into foreign exchange as an alternative to investment. And that's where the problem is. The speculators would ask themselves that if I put my money into FX for the next 1 month, am I able to generate return of 5 or 10%? But if you have alternative asset classes that you can invest in and you're getting decent return on them, you will go there.
Yes, so the central bank is bullish on raising interest rate, but the market is taking that on a bearish level.
So yeah, the market will continue to be, continue to have a bear sentiment into the next few months. And if you're talking about credit, again, I think that you need to be very careful when you begin to push out credit, because in a high yield or rising interest rate environment, you need to cut back on your credit. Because what that means is that you will be giving people money at a very high rate, but that's going to put a lot of pressure on repayments and it's going to increase your risk, exposure.
Are you folks at Commercial Partners doing what you call the future forward thinking into what 2023 will look like with the election in the first half, the new administration around the middle of the year, and no one has any idea who's going to come in as a new president and what his team will look like? So does 2023 look like a very straightforward year to you, a little bit more like a cooked spaghetti in a hot water?
No, I think that, yes, we would have it hot at the first few months of the new regime. But I think that if the regime is very proactive and progressive, we should begin to see some direction. I think what investors want is some stability. Stability in terms of economic policy.
They want certainty.
And certainty.
But
exactly.
Do we have that certainty now of what 2023 will bring?
Yeah.
That's my question.
Well, it's a very tricky question to answer. But I'm always very positive on Nigeria and bullish on Nigeria. And people ask me why, Tosin. And I say to them that you can only think, outside of the box when you're positive about certain things. Okay. So there's been massive investment into gas. I actually think that that's going to be a game changer. There's also been touted, news that Dangote refinery should come upstream, full operation in 2023. That I think is going to bode well for Nigeria. However, there are a few other policies in terms of the fuel subsidy, for instance. I'm sure you and I spoke about it, that the first scarcity out there, it's crazy.
Yes, sir.
My driver told me that he bought fuel for 220 Naira.
So there's no certainty about the price of fuel and fuel subsidy for next year yet?
Yeah, there is no certainty. But the federal government has to do something about it. I think that they need to take out the fuel subsidy.
I don't like uncertainty. But again, it looks...
But market likes uncertainty. I mean, you can only make money when there's uncertainty. I mean, if it's a straight line, you're not going to make money. Everybody just joins the line.
Tosin Osunkoya, co-managing partner at Commercial Partners. I'm sure you guys will be pushing out your end-of-year report sometime very soon.
Absolutely.
Let me be the first to know.
Oh,
Thank you very
certainly.
much. Have a great Tuesday.
You too.
Evening. Thank you so much.
Bye.